Good afternoon, ladies and gentlemen. Welcome. I am the Crypto Crow, and I'm going to cover something that I think is going to blow your mind a little bit, and that is going to be the potential price action of Bitcoin upon ETF approval. And I've been deep diving a bit, doing a lot of calculations, trying to figure out how could the market move. And so we're going to just dive right into it. I don't want this video to be long. I just want it to be educational. So the first thing that we're going to show you is we're going to go to the website. So first thing I'm going to show you is a congratulatory. Down here, you'll see my very first trade close in 2024 was positive $1,813 after fees. It was basically a $2,000 trade. I'm very happy with it. And the price has been moving down a little bit. So I don't know if we're going to get a pullback now or what. I'm watching it. But my trade book is looking happy, and I'm quite happy. So thank you, Fairdesk, for giving me the opportunity to get this done. Still learning. Now, we're going to go into gold, because there's this narrative that's been put out over the news and things that basically said gold surged 350% after its first ETF approval. Could Bitcoin do the same? So I'm going to answer this question real quick, because if we actually look at gold on the charts, all right, let's look at gold on the charts here. This is gold. Now, this down here is where gold got its first ETF approval. Okay, this was November of 2004. Okay, so November of 2004. And so what they're basically trying to compare to Bitcoin is a 350% surge over many, many years. Okay, we're talking 2004. This peak that it saw was in September 2011. Okay, so they're saying a surge. Well, okay, if we want to call it a surge. But what happened initially? Okay, at the very beginning of the approval, the price moved up a bit, and we saw kind of this FOMO from August all the way up, okay, which is basically very similar to what we've been seeing. And then we got an initial pump a little bit right at the news. Here we are crossing into December of 2004. The price was moving up a little bit, and then it came back down and it reversed a bit. This is almost like it was having its own halving, okay? It's kind of what this chart looks like here. And then it got its parabolic run. So by 2006, it was up, but it wasn't up that much. I mean, it was up relatively to gold and the way gold was used to moving. But ultimately, let's say we got the news here and we peaked out here. That's about an 80% increase, okay? Over, we got 2005. So basically over a year. Isn't that funny? It literally looks like it had its own halving and a parabolic run, which typically lasts about a year in Bitcoin. So I find that really interesting. So from there, we got a pretty significant pullback. How much was that pullback? I'd laugh if it said 80%, because I haven't even looked at it yet. Let's take a look. So it peaked out, dropped down here to a low. Okay, so it basically got a 25% correction. That's not unheard of. And then we got a second peak, right? And then the second peak came years later in 2008, so forth and so on. Okay, so yes, it did rise up and it did do very well. And the asset continued to go up. But ultimately, it was a period of 7 years that the price, quote unquote, surged 350%. So now the question is, what could we expect Bitcoin to do if these ETFs were approved? And ultimately, this is where things get interesting, because from here, I pulled up TradeLight, and I wanted to figure out what do the order books look like, okay? So if we look at the TradeLight order book, this here is basically, I grouped everything by 1,000. All right, I just wanted the bulk of what it would take to move the price from the current $46,000 area. We're not at 46,000 now, but to get to that price, we're looking at 3.85 million, which isn't that much. All the way up to 68,000. So a $68,000 price point is moving the price 50%. And I calculated that, and here, I'll see if I can pull that up to show you real quick. I calculated that out, And where is it? Maybe that's it. Okay, here we go. So I calculated this out. And ultimately, what it boils down to, you can't even really see it that well. Let me make this a little bigger here. I'll put it on the right side. What it broke down to is I've seen a lot of articles basically talking about when these ETFs get approved, that we're ultimately looking at $14 billion worth of 14 billion US dollars entering the Bitcoin ETF markets over the course of the first year. So what's interesting is $14 billion is pretty significant. All right. Now, if we broke that into a monthly basis, that's $1.16 billion a month going into Bitcoin, basically over the course of the bull market. Isn't that funny? Isn't that funny? Even more than that, because if we look at it, the halving is coming up in April. So overall, we've got February, March, April, yeah, a few months. So I don't know. Like, let's just say we got like 14 months off the top of my head. It's super late. I'm recording this late. Sorry. And simple math throws me, as some of you guys know, when I do these late videos explaining some things. But the gist of it is 1.16 billion a month. Let's say that fed into Bitcoin over the course of the next bull market, starting, I don't know, in the next few days. What does that look like? Well, to move that price from $46,000 up 50% to $68,000 alone is only $267 million. $267 million to basically move Bitcoin's price up by 50%. Now, there are a couple questions to this. Number one is, how much of this Bitcoin that these spot ETFs are going to be buying are going to be on exchanges compared to over-the-counter platforms? Because generally, when you're talking about that kind of volume, there are so many of these over-the-counter platforms, and they'll say, listen, we'll give you a 3% discount if you're going to be buying more than this amount. We might give you a 5% discount if you're going to buy this amount in bulk, talking millions of dollars here. Well, they're talking $1 billion a month, over $1 billion a month entering the space. However, these over-the-counter platforms are basically selling for mining oligarchs all over the world. And there's only so much supply, which means that a lot of the supply is going to have to come off of exchanges and suck up the retail market, which is ultimately what's going to drive the price up. The over-the-counter business isn't going to drive the price of Bitcoin up. It might a little bit, but not really. It's not going to have an effect on the retail market. And the retail market's typically what drives the price, right? The miners are basically working out these deals with bulk sellers. How many of you in crypto have been in crypto for a while, have heard a buddy, a friend of a friend has a buyer in China that wants to buy 45 Bitcoin or 100 Bitcoin. If you know somebody and they make the buy, they'll give you a percentage of the deal as a finder, right? It's all bullshit. It's all scams. These people don't need you. They don't need every Tom, Dick, and Harry all over the place trying to find people to connect them with. They're already well connected. Those are all scams, okay? And there are many different ways that they pull those scams off. But ultimately, you can spend months and months and months. I had somebody come to me like, I got a buyer. And I'm like, no, you don't, man. I guarantee you. And then he found somebody to help him. And the whole thing fell apart after months of going back and forth with people. I tried to tell him, I'm like, listen, they're all scams. Stay away. Anyway, if we look at where that price could go potentially, you're talking $267 million to move the price by 50%, which would bring us to $68,000. And you might say, well, Crow, that's only one exchange, isn't it? That's only one exchange. The thing of it is when the price moves on the major exchanges with the highest liquidity, as I've explained this many times on my channel before, a lot of those exchanges are providing fuel for a liquidity pipeline that is used by thousands of other exchanges, however many exchanges are out there. A lot of these exchanges are all piped in. It's almost, think of it like a fuel pipeline, right? It goes through an entire country. All the gas stations are feeding off of that, right? I mean, that's basically what a liquidity pipeline is. And these smaller exchanges are paying fractions of a fee, fractions of a percentage of a fee to have access to these liquidity pipelines to ultimately establish their order books, so they don't, because maybe they don't have internal market makers, because that's another fee. That's even more expensive. And there's so much more to making markets for an exchange. So a lot of these exchanges, they just pay a tiny little snippet from their transactions into a liquidity pipeline, and they're all pulling from a lot of the same ones. I'm pretty sure Coinbase is probably a liquidity pipeline provider. I'm sure Binance is. There are a lot of, but it's always the biggest exchanges with the most liquidity. So what happens on those exchanges gets filtered out everywhere. So if they were to go to Binance or Kraken or Coinbase, and I'm pretty sure Coinbase is already going to be like a custody provider for the BlackRock ETF anyway, unless it's changed and I'm mistaken, but I think that's it. So it wouldn't necessarily, and I'm sure that a lot of these exchanges probably have over-the-counter vehicles as well. So I'm pretty sure Kraken does, if not Kraken, maybe Gemini. But anyway, the point is, they're going to be buying up a lot of freaking Bitcoin, and just 267,000 out of that 1.16 billion for the month is going to move the price by 50%. Now, the other side to this is that as the market's moving, the order books are moving as well, right? So this is basically like if somebody just came down and dropped $267 million on a market order, sucked it all up, the price is just going to keep moving. But if they sucked up all those order books at one time, that's $267 million to move the price 50%. So, as the markets are moving and the market makers are moving and everybody's doing their thing, you could probably average it out. I mean, would it be insane to think that we could move, 100% relatively quickly once these ETFs get approved? I think it's absolutely possible. And what does that look like over the course of a year, 2 years? I mean, doing the math looks so ridiculous that I can't help but think to myself, if just this amount of Bitcoin is going to move the market by that much, folks, this could absolutely be beyond ridiculous. Okay, I'm serious. This could be absolutely beyond ridiculous. And the thing of it is what do you think is likely to happen with a lot of these people that sell the Bitcoin to these ETFs? They're probably going to start pumping it into altcoins. Because once the Bitcoin market is done moving for a little while, or maybe the moves happen, I don't know if the moves are going to happen slowly with limit orders. If it does, to some extent, we could even see some stagnation in the Bitcoin price, depending on, when these ETFs make their purchases and how, and they're just setting it all up on limit orders while they're doing things with the media and elsewhere to try and push the market down lower so they can get in cheaper. But the thing of it is that with that kind of volume, they're not going to be able to do that. I mean, I can't even imagine what they'd have to do. If they're moving the price down by that much, I mean, they could easily tank the market with $267 million, drop the price down 50%, and then start setting limit orders to start getting it in cheaper. I don't know exactly how they're going to facilitate these purchases, but I'm telling you right now that when they do, the price is going to move. I personally believe that the price is going to move much, much higher. I think it's going to get pretty insane because there's only so much they're going to be able to do with the available supply. There's only 21 million in the world, and I know that a lot of people out there are not going to be selling what they're holding, especially this close to the parabolic run post halving. I just don't think that's going to be the case. So they'll probably play some games initially to buy up what's currently available, but the price is going to have to go up to start shaking these hands. There's a lot of diamond hands in Bitcoin, and the price is going to have to move if they're going to want to separate those Bitcoin from those people. And from there, man, I think the money's going to start really pumping into alternative assets like Cardano and maybe Ethereum. I don't know. Ethereum has not been looking that great for quite a while, man. I mean, it's been hovering around the 2,200 area for just forever, it seems, while Cardano has been going up 50% against Ethereum and Bitcoin for that matter. So it's going to be real interesting to see how that starts to move. But anyway, that's it in a nutshell. I mean, ultimately, it just $1 billion a month going into the Bitcoin, and you only need 267 million to move the market by 50%. Even if you were to average that out and say, $1 billion a month, let's just say that you got 4 instances of that. And as the market book's changing, resetting, even if we got 170% increase in price over the course of a month, and that started just really setting things off pre-halving, oh my God. I don't know. It'll be very interesting. And the thing of it is when I was doing the calculation, I was trying to figure out, well, what exactly happened to gold? It's not easy to find how much gold was in circulation and how many buyers were there at the time. Like finding that kind of data really isn't easy. I've been striking out, but if you've got any references to that, let me know in the comments below, and I could do a part 2 to this video and hopefully open up my eyes as well as yours to what the potential is even better. So that's it for now. Thanks for joining me, guys. Grow your coins, and I'll see you again soon.